Hello, everybody, and welcome to the Darker Frontier webinar on the outlook for Saudi Arabia for the rest of this year and going into 2021. Welcome to our conversation. This is the second installment of our webinar series, and we appreciate you giving us a few minutes of your time today. We will be presenting materials, the visual slides, and so if you are only dialed in through the phone and you would like to see the slides we will be presenting, please also dial in through the GoToMeeting application. Also, we will be taking questions at the end. And so if you would like to ask a question or make a comment, feel free to send them over using the GoToMeeting application on the right-hand side of your screen by typing them to Darker Frontier webinars. We will collect them and we'll review them and do our best to answer them throughout the webinar and in particular at the end during the Q&A session. As an introduction, my name is Martina Bozajeva. I head up the research team here at Darker Frontier, and I'm joined today by Zeynep Kosreisolu, who is our director for Middle East, Africa, and Turkey research, also in London today. Before we get started, I realize that some of you may potentially be new to Darker Frontier, so I would like to take just 2 minutes to give you a bit of context about the firm and how we work with executives at major multinationals. We are a market intelligence and consulting firm, and we provide tailored solutions to drive growth from clients across a range of sectors, in particular the B2B, healthcare, consumer, and technology sectors. We have dedicated teams that serve as advisors to clients, delivering the market and industry knowledge that they need to succeed at all points in the business cycle. And we certainly have a lot of experience working in emerging markets and across the Middle East region. If you are new to us and you would like more information, please leave us a message or visit our website at darkerfrontier.com. And one more thing, which is new for both clients and those of you who are new to us, we have launched the mobile application, which is great if you're looking to follow quick updates on Saudi Arabia, other markets in the Middle East, or beyond the Middle East as well, where our analysts review the most important developments on a daily basis and provide their expert commentary about implications to businesses, all available through the mobile application. And we hope you can join us there. Now with this, I would like to introduce today's discussion and give you a little bit of context. This is the second conversation in a series that we're having around the outlook for the Middle East in the context of COVID-19, looking at the rest of this year and 2021. We had a discussion on Egypt very recently, and our clients will be able to access the recording of that webinar and the materials were presented on our portal. Today we're talking about Saudi and our next one is on the UAE. So if you are interested in the UAE market, we have one more discussion just like this one coming up soon as well. And as I mentioned earlier, today we will cover Saudi in the global and regional context. Of course, a lot of pressures on the Saudi economy as the macro outlook is challenging across the globe. And also, we wanted to focus on something a little bit more positive and look for the opportunities. We know Saudi is a critical market for a lot of multinationals. Where do we see more upside, especially in this challenging environment? We will do a few polling questions, live polling questions during the course of this webinar as well. So look out for those and we will be able to share the results with you immediately after. So with this, I'm going to pass it over to Zeynep, who will talk to us through Saudi in the global and regional context.
Perfect. Thank you, Martina, and hello everyone on the line. Although it seems we have passed the worst of the crisis, we are still heading into a highly uncertain and challenging economic and business environment in the second half of this year, but even going into 2021. So let's start with our global assumptions that will be underpinning our forecasts, and then quickly move on to actually Saudi Arabia's outlook. Firstly, from a coronavirus perspective, actually, from a vaccine assumption side, we are basically, of course, potentially, we are expecting to see some sort of a potential discovery in a vaccine for the next, basically in the next 6 months or so, but that really isn't what's key for Saudi Arabia's outlook. What is most important is whether we are able to get a vaccine that is available for mass distribution to the extent that it does create a meaningful difference in our level of economic activity, in our level of global transportation, and confidence levels for international travel as well. So this we don't expect to happen until the middle to late 2021. And that's quite critical because throughout this time, especially through the winter, we do expect the infections to continue and to expand across the world, but we do not expect a major simultaneous lockdown of our large economies in the world as we saw in Q2 of 2020. We still expect localized, temporary, and sporadic mobility restrictions across the world. And what this really means is overall international travel does remain limited until 2021. And the reason why all of this is important is because, firstly, it does, of course, put the global economy in recession. As you can see on the chart on the left, we do expect to see most major economies in the world seeing contracting GDP performance this year, growing or returning to growth in 2021. And this, basically, the main implication for Saudi Arabia here is the outlook for oil prices. You can see our forecasts here for Brent crude specifically. We are expecting $33 per barrel on average for 2019 and around $50 per barrel on average for 2020 for Brent. And this is assuming that we do see some of that increased transportation activity and global travel as well more in 2021. And when we look at the world, most economies in the world are not expected to return to their pre-COVID levels immediately next year. This is also the case for the MENA region. As you can see from the chart on the left, we are not expecting an immediate rebound, but a gradual recovery and return to pre-COVID levels closer to 2022. And in this kind of an environment in the Middle East Africa region overall, Saudi Arabia still presents actually one of the most significant opportunities in the region. It provides this optimal balance between population size, income level, growth and reform outlook, and even in terms of macro stability. So any business that aims to grow in the MENA region, in fact, in the emerging EMEA region, can't really deprioritize Saudi. So most of the multinational companies we are working with are preparing for the challenges ahead, but of course also trying to capture the market's opportunities as well. So we'll look at both sides of that story in basically the next hour. Now, when we look at some of the key pressures on the Saudi economy, of course, unfortunately, the country has been put under pressure on two major crises. The first one from the COVID-19 shock, simultaneously coming with the second, which is the oil price crash. From a containment perspective on the COVID side, unfortunately, Saudi Arabia is just now barely containing the virus after seeing a spike in June. And of course, the June spike was partly because of post-Ramadan, but also because of a rise in testing capability. So there's some positive and negative factors here, but there is a bit of a time lag in terms of MENA countries overall, but also of Saudi Arabia in terms of containing the virus. And of course, this has implications around government spending priorities, especially. The government has had to continue spending on healthcare capacity, on COVID management expenses, on testing, etc. So this unfortunately came at a time of a sudden and drastic drop in oil prices. So you can again see from the chart on the left that there has been a significant drop in oil exports. We have seen the trade balance turn negative for the first time in actually quite a few years. And we are seeing oil export volumes drop quite significantly. And even the oil export earnings were around 65% less this April compared to the April of last year. And we have seen some improvement, thankfully for Saudi Arabia and other oil exporters, some improvement in oil prices. And this has been due to, firstly, some improvement in sentiment, overall international financial market sentiment, where the expectations are for that recovery to start to, at least economic activity to start to pick up in Q3. Secondly, as economies have been opening up globally, we have started to see a slight increase in transportation and energy demand as well. And lastly, of course, the OPEC plus production cuts. When we look at the data, we are starting to see the inventory stabilization just now. We had seen a very strong uptick from February to May on inventory builds from an oil perspective, and only now, after weeks of severe production cuts, we're starting to see that kind of stabilize, and we will need a few more months of production cuts to really balance the oil markets. And you will see that Saudi Arabia and the rest of the OPEC countries, plus their allies like Russia, will reduce some of their cuts August onwards, bringing down their production cuts from 9.7 to 7.7 million barrels per day. So this is on track with their original plans. We will have to see how the demand side develops, but we should not expect export increases from Saudi. If anything, this higher oil production is going to be going more towards supporting domestic demand. But even if we do see some uptick in production and in prices, the damage has been done, unfortunately. You can see already in the first quarter of this year, 24% decline in oil revenues. We would expect this to be over 50% in the second quarter in terms of the drop in oil revenues. So a major pressure to the Saudi budget, if we remember that around 60%, even after some of the diversification lately, around 60% of the revenue still come from oil. And again, the excise and the VAT, excise tax and VAT would have helped in this kind of an environment, but of course, COVID-19 situation has meant that there's been a drop in domestic demand as well. So we're seeing revenues on that side remaining relatively weak in Q1, which will continue to be the case in Q2 as well. And just to put in perspective, the Saudi government has been issuing debt and can issue debt. Actually, this year they've already announced plans to issue around 120 billion riyals worth of debt, which is above the 76 billion riyals that they were originally projecting for this year. So there is some room to increase this debt, but you can see that they've already been doing that for the last few years. So the major implication here is, of course, the impact on purchasing behavior for the government. So there is some room to support the public spending side from debt issuances, but a lot of that initial additional revenue or any kind of revenue that is coming in this year, of course, has been directed more towards COVID-19 management. So you can see here additional resources being allocated to, firstly, the healthcare side, a lot of support packages towards the Ministry of Health, and also large support packages to health facilities as well. And then you also see the government has been trying to provide as much support to the private sector as possible. This does not, of course, register as direct procurement, but actually as increased kind of indirect support to the private sector. And while all of this additional spending has had to take place on the COVID side, we've been hearing major spending cuts announcements as well. So you can see non-priority spending was announced to be cut by around $13 billion in the 2020 budget. Vision 2030 allocations to be cut around $8 billion, which probably could be a bit higher than this announcement. And then some of the major projects like the Red Sea Tourism and NEOM projects, they've seen their timelines extended, as well as payments, and actually implementation of the construction is going to be seeing some delays. But the social infrastructure and oil and gas projects have been announced to remain as key priorities, even though we are seeing some announcements from Aramco, for example, of a gradual slowdown of their expenditure plans as well for this year. And with these cuts, unfortunately, it still cannot help the Saudi government avoid a large budget deficit this year. The original plans for a deficit were a little over 6% to GDP for 2020, and this was announced before the oil price crash, before the COVID-19 crisis. So already the government was expecting to see a larger deficit this year on the assumption that oil revenues would actually be lower. So there was definitely that preparation for a low oil price environment. Unfortunately, this year is just increasing the urgency and the scope of the austerity that actually is required. And if you see on the chart on the right, we are expecting to see a further decline in government spending this year by around 4%. Just a reminder that this is purely for procurement and employee compensation, and it does not include investments. We'll take a look at those later on. But overall, we were already seeing from the Saudi government that there were plans to cut their expenditures before the oil price crash, before COVID-19, by around 3% each year until 2022. So this year is just an acceleration of the plans that the Saudi government had.
And Zainab, before we keep going, just a quick question. When we think about the policy response on the Saudi side, it's very clear that the government already was under quite a lot of pressure. So it doesn't have the types of options that the US or the EU have in terms of drastic increases in spending. But if you put it in the context of other oil producers or maybe the Middle East, how substantial is the stimulus that Saudi has implemented compared to other countries?
So the stimulus actually is quite substantial. It's one of the largest amongst the oil exporters of the region. Of course, the Saudi fiscal situation is a lot better than others in the region across Middle East Africa, not just Middle East North Africa. We are seeing much less room to raise expenditures from other oil exporters, and these can be the more distressed ones like Algeria, or actually countries like Kuwait, which does have large fiscal buffers, but they had not really taken the measures that Saudi took in the previous oil price crash. So we are, of course, as Saudi Arabia, the country here is entering this year with having made some progress in terms of creating a more sustainable fiscal environment. So there is room to increase debt to provide this stimulus, not to the extent that, of course, we've seen in, as you said, Europe or the US. And the key thing, or the key difference in Saudi, has also been that the stimulus, an important portion of it has gone to actually healthcare. So there actually has been that added resource allocation towards just ensuring capacity does exist.
Thank you very much, Zainab. So how does this link to the private sector? How do we see that connection between, obviously, the government as a really important driver of demand, and how that might affect private sector demand out of Saudi?
Yes, as you said, especially in Saudi Arabia, what the government does has big implications as ripple effects to the private sector. And as you can see from the chart here, if you look at the 2019 figures, all the kind of categories on the right, the private sector was starting to see an improvement in 2019 after basically struggling in 2017 and 18. So this positive momentum gained in 2019 has been paused, derailed, quite unfortunately, this year. But we'd still expect actually some improvement going into 2021, probably more rapid improvement in Saudi Arabia than compared to other countries in the MENA region. And just at a very high level, the construction side, for example, finally after a few years saw an increase in demand in 2019, and of course quite a big hit in 2020. But with confidence returning, we would still expect some of those key industries like entertainment investments to actually gradually come back in 2021. The government will still continue to prioritize port and road infrastructure and public transportation as well. And on the wholesale retail side, for example, again, 2019 had seen a pretty strong positive momentum, which we would expect to be quite significantly hit this year. We'll look at the numbers, but actually return in early 2021. And then, of course, on the finance and kind of insurance, real estate side, banking sector profitability under pressure, the real estate, especially on the commercial side, under pressure. So this year we'll see those numbers in negative territory potentially. But again, there is some government policy that could generate some more momentum here. We will look at government support incentives for the real estate, at the same time, we will need to monitor the medium to long-term healthcare insurance reform program of the government as well. Now, if we look at overall activity levels on the private side, we have been seeing activity decline in Q2. Of course, with demand halting, we're seeing some pickup in June, which of course we want to be cautious of because June had quite high pre-VAT purchases, which will stabilize after July. And up until now, many firms have come under quite high financial stress that they will need months of revenue recovery and demand recovery, not just June, for the private sector to kind of recover. So you can see from the survey done by the Saudi authorities themselves that companies have been struggling to make salary and other payments and to simply generate revenue. So they're most likely to return to borrowing, but this also, just like the government, will influence their purchasing behavior as well. And it's not only small and medium enterprises, but also large companies that have been announcing delayed payments, which is not particular to Saudi, which is kind of quite common across the world right now. But we do want to monitor the ripple effects that these payment delays can generate either on the employment side, but also on the supply and customer chain of these larger companies. So quite important operational risks, actually, we want to monitor on this front. And then the private sector and what the government policies, they are going to be influencing the consumer demand as well. You can see here that unfortunately the previously improving strong trend of consumption in 2019 has been quite badly hit in 2020. April point of sales transactions fell over 30% on a year-on-year terms. And this, of course, is most likely to be the dip. Potentially May is also going to be in this area, and we will probably see that spike in June. As we mentioned, though, this is going to be pent-up demand, or let's say existing demand being pulled forward due to that VAT entering into implementation in July. So that spike in June is going to be a one-off. And you can see that during the crisis, Saudi consumers really stockpiled and increased their food and beverage purchases, but basically stopped spending on anything else. So again, moving forward, that food consumption is also going to start to stabilize as well. So we are entering into a relatively moderate spending environment in H2 of this year. And of course, beyond just spending, we want to look at the sentiment amongst the Saudi consumer. We can see from various surveys that the Saudi consumer remains worried and cautious about the virus. Not surprising, but most of the population, actually a larger portion of the local population, are still concerned about COVID-19. 40% of respondents, as you can see to a survey on the screen here, actually reported they would prefer to even lock down the economy if it means containing the virus. So that is not taking place, but you can see the sentiment of the consumers here overall experiencing worries around the situation of the virus, which will influence their purchasing behavior in the next few months. And this kind of a consumption environment does have an effect on inflation. We tend to have quite moderate low inflation in Saudi Arabia anyways, but this additional drop in demand is going to be weighing on that inflation outlook, even with the tripling of the VAT. So our base case scenario assumes that companies will not really have that much of an ability to reflect this VAT increase onto their selling prices. We are seeing many companies like Lulu Group, for example, and many others implementing campaigns like VAT on us and discounts. And so we are going to be seeing that promotion discount pressure continue, so that we can see some of that demand being realized by the consumers. And even if you do work with various scenarios, we still don't expect the very large spike in inflation if your assumptions in terms of general ability of the Saudi businesses to reflect onto selling prices, this VAT increase is higher. So overall, yes, low, moderate inflation, but this really then means we want to be watching the margin erosion of partners, of retailers, and seeing how that may influence their investment or spending behavior towards later in the year and in 2021 as well. And then critical question we always get is, in this kind of an environment, what happens to the expat population in the kingdom? And this is actually a bit of a complicated story. It's not as straightforward as a mass exodus story that news headlines try to showcase, but of course we are expecting overall a decline in the expat population. But this population tends to show more of a fluctuation, especially when you look at the lower skilled expats working in the construction sector, for example. We saw a major decline in 2018, but then a recovery, an increase in these numbers actually in 2019 with construction activity picking up. So that side of the population will still remain lower than historical averages, but will continue to show that volatility with demand for construction kind of gradually increasing and falling throughout the next few years. But on the higher skilled expat side, the growth there is also likely to be limited moving forward. We, of course, have seen that Saudization quotas have been expanding through sectors and expanding into the higher skilled employees. But in the meantime, many companies have also been building their talent management plans to try to retain these Saudi employees as well. So a bit more of a sticky outlook in terms of the growth in expat population for that segment as well. So overall, we want to highlight that we should put into plans a lower expat population growth into the future, whether it is we're targeting the higher income or the lower income side.
Zainab, I have a hypothetical question, just comparing Saudi to some other markets here. In a lot of other places, of course, the macro fundamentals are even more challenging than in Saudi. So the market actually, in comparison, looks reasonably okay, given that everybody else is in a pretty bad situation. Specifically to consumers, in a lot of other places, what we are seeing is very large-scale job losses, and we expect that some of those jobs are never coming back or would take years to rebuild, which means structurally high unemployment for 2-3 years, maybe even more than that, including in markets with strong social protections. The population dynamics in Saudi, though, are different. And I'm just wondering, given that people have stopped spending on certain types of products or services because of health concerns, those who have perhaps maintained their jobs, do you see a scenario in which if the health situation improves and consumers' confidence improves a little bit as well, that there may be some pent-up demand from those consumers because they have been saving, as long as they feel like they also have the job stability?
Yes, especially when we look at the higher income segments, there has been a lot of pausing of expenditures, and that should actually start to come back in gradually in the second half of this year, but more meaningfully in early 2021. Actually, when we look at global surveys, the confidence level of Saudi consumers tend to be much higher than the global average, and that's mainly because especially the local population still continues to trust government support, public sector employment. Of course, from a historical perspective, today's environment is much more difficult for the Saudi consumer with more taxes and less certain employment in the public sector. But compared to other markets, there's of course a bit more of that buffer, whether it's pegged currency, low inflation, and just ongoing government support. So from the higher income segments, we would expect that pent-up demand to start to come back in early 2021. And we've even seen some of that in June, with a lot of the demand being pulled forward with a pre-VAT rush of consumers to purchase some of their durables and even non-durable goods.
Got it. Okay, that's very interesting, and I think will be taking us into the opportunities section. But before we do that, we wanted to ask a question from everybody on the line. And the results themselves will be anonymized, but we'll be able to see how everybody else who is attending our webinar today feels about demand timing. Of course, you're all coming from different industries, but that in itself is helpful. So if you don't mind, just for a moment, answering the question that should be showing up on your screen around when you expect demand to return to pre-COVID levels. That seems to be a really big benchmark that a lot of companies are working with right now. And as soon as we get the critical mass of answers, we'll show the results, and then we'll focus on some of the opportunities discussion. Just a couple of final moments before we close the poll. Okay, so good chunk of the respondents are expecting actually a recovery to normalization really at the end of next year, or potentially even into 2022 or beyond that. So definitely very conservative expectations. Based on, Zeynep, what you've been covering, fairly justified based on the macro situation in terms of how long it might take demand to really truly normalize as opposed to start to improve, which we may start seeing sooner, but it will take us a while to get back to what used to be normal levels for COVID. Excellent. Thank you, everybody, for the answers. And Zeynep, take us through some of the opportunities. Let's continue on a more optimistic note.
Yes, and actually the polling results that we've just received are largely in line with our expectations at the macro level. We don't expect an immediate return to pre-COVID levels. Still, when we look at when would we reach those 2019 figures at a mass consumption or investment level, we are expecting 2021 getting close to that on the consumption side, as you can see, but maybe post 2021 on some of the other areas of the economy. So very much a slow recovery that we would expect, as it seems in line with many of the representatives we have on the line, but still there are some opportunities to capture throughout this time frame. And probably the most obvious opportunity that has been emerging through the crisis has been e-commerce. We've seen a significant rise in e-commerce utilization under the lockdown, or let's say the restricted mobility times, and we have seen many companies announcing strong growth in their online sales channels and really trying to actually catch up with that increased demand rather than trying to kind of deal with a drop. So very important increases we've seen. And actually, if you look at the survey results on the right of Saudi consumers, not a lot of them are actually comfortable with visiting malls, going to the cinema, or dining out. So actually, over the next 6 months or so, there's going to be that continued demand on the e-commerce side, at least in the short term, where just assuming that the sentiment is going to be keeping consumers' consumption behavior quite cautious. But we don't want to just take a look at e-commerce as a short-term opportunity. Actually, from a medium to long-term perspective, we would expect that e-commerce opportunity to continue to grow in Saudi Arabia. And this is not just because of today's increased demand, but actually Saudi does present an optimal mix of a population size, a large size of its market, the digital sophistication that it has, and the income levels that it has as well. So we are seeing that a large portion of the population is, of course, online, around 13 million of which are frequently purchased online. And of course, the country has high social media use and banking infrastructure, and actually usage of banking services to create these strong foundations for e-commerce across this region. So overall, this is going to be quite important for multinational companies to invest in. And as we do that, to leverage this channel, it'll be very important to collect much more systematic and in-depth customer and consumer insights from the online perspective. And this we can rely on third parties, on aggregators, on retail partners, distributors, but actually it's going to be quite important to find ways to collect our own data and actually support these partners that you may be working with. And this will be critical in not only adapting your offering, but in determining the kind of channel setup that you may want to have in the kingdom, and also, again, supporting the external partners that you may be working with in this kind of a highly competitive environment. So we don't want to just look at e-commerce as an immediate short-term opportunity, but actually look at it as a way to create a more sustainable, diversified business in Saudi Arabia. And we want to make sure that the online and the offline strategy is very well integrated, that offline is not just a complementary or additional channel, but there is that combined online and offline strategy, and that we evaluate the ideal channel structure, again, from a strategic perspective, incorporating the growth timelines and outlooks that you have, the capabilities of existing partners, and also the kind of resource allocation you want to put into the channel. And then we also want to put a lot of attention into supporting the retailers and distributors we're working with to be able to kind of really increase the mind share that they have of your business. So we have more resources on this if any of our clients on the line would like to provide or have a deeper dive on how to build their Saudi e-commerce strategy. But this is not the only opportunity. In the meantime, from a product perspective on the consumer side, there will still be some demand for certain kinds of products, especially when you look at home working, electronics, and entertainment products, especially, as Martina, you've mentioned, from the higher income segments. Again, other kinds of durables in terms of, again, home working furniture, activity, and kind of, in some cases, even cars. We have seen the car sales increases in June already, and some of that luxury goods demand will actually stay with us. But here it's going to be very important to build that online experience of luxury purchasing and of luxury shopping, because it seems we are likely to stay in this environment for some time in the near future. But of course, consumers are not the only area in which there will be opportunities in Saudi Arabia.
Zainab, yes? Before we talk about the government, I wanted to also just ask a quick question on e-commerce from the group, because we've seen not just in Saudi but across the world that there's been an acceleration in consumers trying e-commerce for the first time and shifting to it as a preferred or part of the mix between online and offline. And the longer the concerns about the virus continue, the more likely are these habits to stick. And so we wanted to ask everybody on the line who is able to actually engage in e-commerce about their sense of how that percentage of online versus offline sales is likely to shift in 2 years from now, basically post-COVID. What percentage of your sales do you expect to be coming from online channels? Because I imagine that the answer here would be fairly different from what it was even 6 months ago. And if everybody who is able to engage in e-commerce wouldn't mind just answering this, again, the results are anonymous. We might see some interesting benchmarking here across the individuals who are on the line. Interesting. So there's quite a big split here. There are some companies that expect that online will still be a small percentage of their overall sales, but there is actually a good 40% or so that is expecting a substantial percentage of their sales to be coming from online channels. And I imagine that you're all looking to invest more in both channels that can take you to that place, as well as the data, skills, and infrastructure required to really be able to manage such a substantial shift in terms of overall e-commerce sales. So Zainab, with that said, let's talk a little bit about opportunities for the government as well, as we know that that's always an area that is very critical for companies in Saudi.
Yes, and very interesting polling results here as well. A lot of companies are still looking at their e-commerce channel, even if they don't expect the massive increase in terms of sales, still trying to remain in those channels for marketing purposes and brand visibility as well. So we'll see how a lot of those investments pan out in the next few months. But on the government side, of course, there has had to be some shifting and shuffling of priorities as emergency response to COVID. But when we look at in moving forward into the future, healthcare will have to remain a priority, and the dual mandate there of trying to raise the quality of specialized care and expanding primary care is going to stay with us. So helping the government find cost-effective ways to expand on both sides of these goals is going to be quite critical in the next few months. And from a more investment perspective, those infrastructure projects will actually continue even in 2021 onwards, and especially investment in new sectors like tourism and manufacturing of key products is going to still remain priorities for the government. So overall, from a high level, not a major shift in the mega priorities. Vision 2030 remains that kind of guiding principle. But more specifically, for example, on the healthcare, and if we take a look at other industries coming up in the next few minutes, the opportunities for healthcare are going to look different across time. In the short term, of course, COVID-19 related demand is here to stay with us over the next 6 months, and probably, of course, to a certain degree into 2021, but the short-term focus still remains. And then in the medium term, when we look at 2021, expansion of, and even into the longer term, actually, expansion of primary healthcare is important for the Saudi government across the country. And then there is that focus on trying to increase local manufacturing of both generics, but also medical devices as well. And then the overall goals of trying to integrate digital solutions have been accelerated. And when we look at some of the more traditional disease areas like diabetes, oncology, and cardiovascular diseases, of course, they will remain with us as top concerns and attract government resources to managing their cost implications onto the Saudi health system. And the digital side of this, of course, has been accelerated on healthcare in the immediate term, but this is actually an opportunity across sectors. So in the chart on the left, you can see that the government has been already prioritizing increasing the digitalization of its processes across all public sector enterprises, entities, and had been kind of organizing its expansion plan of this digitalization through which agencies actually are in need of this improvement the most. So you can see actually a lot more solutions are needed from the public sector. So companies that can tap into this will continue to provide opportunities. And then, of course, on the healthcare side, we have seen some more of the basic solutions being accelerated in usage, from telemedicine to online deliveries of pharmaceuticals. But we are also seeing this expand into other areas. We've seen 3D printing expand, for example, or we have seen outside of the healthcare some larger companies looking for digital solutions to actually enhance their internal operations. A lot of businesses will need cost-saving solutions and efficient ways to scale their business and protect their supply chains. So solutions that support this are going to be seeing some increased demand as well. And then on to other sectors, we're seeing some improvement on the service sector side in basically 2019 and going into the first half of this year, first quarter of this year. Derailed. A lot of these industries are under pressure this year. Hospitality, entertainment, basically non-existent as opportunities now. Banking sector, profitability pressures, and facing challenges of trying to stimulate growth in the economy this year. But we do believe that there are fundamental opportunities going into 2021 onwards, and especially on the hospitality and entertainment side, this is not as saturated of a market as the UAE, for example. So there's still some investment that is going to be taking place to grow this industry in the near future. And the construction sector, when we look at that, has unfortunately taken an important hit. When you look at the industry, they are expecting around 20% less project awards this year compared to last. We've seen operating costs increase, operating challenges because of course, trying to limit infections across the labor force, delayed payments, cash flow constraints, and this creating a risk of developers, real estate firms, or even companies that supply into the industry going bankrupt. So there is pressure on the industry, but in the short term, firstly, there is some demand, or at least some projects taking place on expanding warehousing, but also COVID-19 capacity, medium-sized hospitals, for example. And then into the future, when we look at some of the very scarce opportunities, companies can actually monitor very closely some of the key contracts that are being awarded this year to try to at least be preferred partners in these projects and position well for increased implementation of these projects into next year. And lastly, on the manufacturing side, this is a relatively smaller, of course, industry compared to other markets in the region and compared to the other key industries in the country. But we will expect to see some of this more towards the long-term expand and provide opportunities, food and beverages and generic pharmaceuticals, but also sanitary equipment and military equipment manufacturing. They're all key priorities for the government to expand. So overall, we do have a very challenging environment in Saudi Arabia, but actually, even though narrow and kind of scarce, some opportunities that a lot of multinational companies will be going after. So we will be in a highly competitive environment as well amid this uncertainty in the global and in the Saudi context.
Yeah, and what I would also add to that, Zainab, is that on paper, at the very superficial level, if you're somebody who's looking at a global portfolio of countries, Saudi might not look like the place that has a ton of opportunities right now, given the combination of COVID and the oil price crash. But I think what's clear is that on the local level, there are some really specific opportunities that can carry us over into the recovery period. And for executives on the ground, communicating that very clearly to global teams who are probably trying to figure out 100 different issues and evaluate 100 different countries is really helpful and important to making sure that the region and the country continues to receive investment so that you can actually capture these opportunities. With that said, and speaking of capturing opportunities, we wanted to ask our final benchmarking question for the day. And this is really about where you see the focus for investment for your business in the next few months. Is it more focused on the e-commerce channel? Is it more around strengthening the skills of local team or partners? Is it more around marketing and engagement with customers, perhaps with the government, or maybe it is something else? But amongst the options in terms of investment, where do you see your focus really being over the next few months while we're still dealing with the impact of COVID-19? And while we wait for the results, just to remind you that if you would like to ask a question for our Q&A session, you can do so by just messaging Dakar Frontier Webinars. We are collecting questions and we'll be starting to answer them fairly shortly. Zainab, would you like to comment on the results? Are you surprised by any of them?
Sure. I think clearly we want to invest in a lot of things, and there's of course a lot of other that we can look at in terms of supply chain, sales infrastructure, local manufacturing. So there's a lot that we're not covering here, but government engagement tends to be the key priority for a lot of companies in Saudi Arabia, even if whether or not they sell to the government. And it is of course interesting that we are seeing training become an important part of that investment as well. But the online side, the e-commerce channel or online marketing tends to, it seems, is priority for less companies on the line. But we can take a look at how this fits in with some of the actions we've been collecting as best practices from across the companies that we are working with. So if we go back to the presentation, you can see here that this actually is kind of largely in line with a lot of the actions that we are seeing companies take. Firstly, on the internal business model side, companies are looking at actually internally improving their efficiencies and internally looking at their channel strategy and whether there's any changes to be made there, and they can adapt their offering with new payment support and solutions, different ways of actually getting the customers to say yes on the offering side, but also internally a lot of focus on that efficiency and cost effectiveness as well. And in line with the training that we've heard from our, or we've seen from our audience today, there's been a lot of focus on monitoring and scenario building of for the future, as there's a lot of uncertainty still. So really training local teams on one, financial risk and receivables risk, as we've seen a lot of that cash flow strains across various industries, but at the same time matching that very financial focus to a higher level scenario building exercises that actually help local teams foresee or potentially prepare for risks that might come into existence over the next 6 to 9 months. And then on the customer side, of course, we are seeing companies resegment their customers based on their strength, on how quickly their demand will recover. So a lot of focus is being put on focusing the sales activities on the most resilient and most likely to convert customer base. So overall, lastly, we are seeing all of that culminate into more trainings and more support and motivational kind of management towards local teams as well, and internally strengthening from an operational perspective the supply chain, potential supply chain weaknesses that the business may have had, and then at the same time from a medium to long-term perspective evaluating local manufacturing. Of course, probably unlikely to be a priority in the short term, but with some of the changes we've seen in the market and ongoing pressures on that side, seeing the potential for that in the medium to long term is also important to align on. So
Zainab, I have a quick question about this. So before COVID hit, a lot of companies in Saudi, multinationals operating in the market, were going through a process of aligning with government priorities, with the National Transformation Program, and with the, I guess, new demand factors from customers, including in the private sector. And a lot of the discussions we were having with them are about adapting the value proposition, the way that their services or products are communicated in terms of adding value to customers, identify new value drivers for customers as well. To what extent do you feel like that work has been disrupted, accelerated? Do you think that they should be thinking differently about what the new value drivers are from, say, the government and B2B customers? Do you see any changes in that trend?
That's actually a very important question. I think mostly we have not seen a derailment, if anything, an increase in urgency for a lot of these services and solutions that you mentioned. Businesses were trying to kind of provide to the government, or at least align on those values. So firstly, on the engagement side, of course, there has been a disruption just simply being able to engage with government personnel, either if you're a healthcare company or not, actually. There has been an actual physical disruption to this engagement, but as it starts to come back, the majority of the concepts and themes and values and purchasing behaviors and needs of that the businesses were trying to align with from the government side actually remain the same. Cost efficiencies are still critical. In enhancing digitalization and streamlining processes is very important. Basically, helping the government do more with less is going to be the key winner in this environment. The government has now more need to invest in healthcare, but also in social infrastructure and in diversifying from oil and thus into new industries. So a lot of these previous goals still remain, if anything, at a much more urgent level. And now it's going to be about which companies can actually more quickly align and more rapidly return to that government engagement cadence with the government as restrictions do open up.
Great, thank you, Zainab. There are a couple of questions from the group, from the participants on the line that I maybe will throw your way. for those of you who are still listening, feel free to drop them. We have 5 minutes. We will do our best to answer these questions. And in fact, there is one very relevant one that just came through. So maybe we'll start with that one. Zainab, so this is about payment terms and payment delays from the government, right? So the fact that payment terms can be very long, and even with that, there are delays in Saudi, it creates a negative motivation for investing in the market. Do you have a perspective on this? Do you expect government payment terms to be even further delayed? How do you expect that to evolve?
This is unfortunately a very big problem in the country. Maybe there are two ways to look at this. First is there have been some projects that have actually just seen delays in actually implementation and just simply physical activity and pauses in that project. So those, of course, will not only see simply delays in payments, but actually a pause in spending on that project. That, of course, requires a different kind of planning in terms of no longer expecting that demand and revenue from that project for the foreseeable future until updates can come in. But there have also been projects that are continuing, purchases that are being made, where actually, yes, the government this year has been even more or let's say has given even less guidance in terms of when payments can come in. We've seen that, we've heard that a lot from construction firms in the previous years. We don't expect, unfortunately, an improvement in this because of the ongoing pressures on COVID management still in the second half of the year and the low oil revenue outlook. So finances will still remain quite strained, and the government will have to make quite actually last minute decisions on resource allocation. But what we've seen companies really evaluate for Saudi is how much, first of all, what are the financial capabilities of our partners? How can we support them? And how can we protect against not actually but risk from suppliers or smaller firms in the supply chain? And this is going to be a critical capability to train on the local side, but preparing for this risk is a part of doing business in Saudi Arabia, at least this year in 2021, unfortunately.
Thank you, Zainab. I think that this was the next question was partially addressed, but maybe I'll make it a little bit more specific. So it was a question about whether big projects like the city NEOM would be affected by the cutting government spending. I think you covered that to an extent, but whether there's something else you'd like to elaborate on, or maybe you want to comment specifically on NEOM itself. Anything you'd want to add there?
There's still some, of course, small developments taking place for these projects. They're not entirely on pause. It's just that the timelines have been extended because the level of completion, the level of improvements in project implementation expected this year are not going to take place. So there is smaller construction continuing, but we should kind of revise down expectations of procurement on those projects for this year.
Got it. Okay. And one more squeezed in. I think this will probably be our last question, but if anybody on the line has others, please drop them our way. We will follow up with you offline and we'll make sure that we answer them or provide you with any materials that are helpful. So for the last question today, Zainab, could you elaborate on the number of Saudi professionals in different sectors and whether that number is satisfying the government's intention and plan to Saudiize with different percentages according to sectors? I think if you could maybe speak about this at the more broad level in terms of where you're seeing the government hitting its targets in terms of Saudiization versus maybe falling behind, that could be a starting point, and we can certainly follow up with more detail offline with the individual as well.
Yes, of course, we can follow up with more detailed data on this that can help us benchmark. Overall, what we've seen is, of course, on the retail side, there has been a lot of improvements done in terms of Saudization. And when we look at kind of the medium-skilled labor, actually, we've started to see major increases on that front. And so there, the Saudization is largely on track, and now moving into more of the managerial roles and into kind of when we look at engineering, consultancies, when we look at healthcare, this has been the later priority of the government that now is also starting to see the increase of the Saudi workforce in those sectors. So actually, the process is largely on track. The main issue is not necessarily hitting the initial numbers, but actually retaining that talent and trying to slow down the turnover of Saudi talent to create a more kind of stable workforce environment. So with data, we can provide more detail with our attendee, but overall, this is continues to be the critical priority for the government, but also businesses to invest in that.
Right. Thank you very much, Zainab. Thank you everybody for joining us. We have run out of time. We hope you found this helpful. We will make sure that we answer any questions remaining offline. You also received the presentation and the deck itself. The next webinar on this series is going to be focusing on the UAE on August 18th. So we look forward to hosting you then, and thank you very much for joining us today. This concludes our webinar.